Now, from the equities to the debt markets, the first corporate bond to be listed outside the Nigerian Stock Exchange since 1961 takes place today on the financial markets dealers quotation over-the-counter platform. Ahead of the listing, Channel's business news editor Bosun Mofaye sat down with the FMDQ chief executive Bola Onodele on Tuesday and began by asking him why corporate institutions are considering listing their debts on FMDQ OTC despite the existing platform of the Nigerian Stock Exchange.
The corporate issuers will be very keen. One, FMDQ OTC, this securities exchange platform, complements the efforts of the Nigerian Stock Exchange for starters. And you see that from the liquidity that FMDQ's platform brings to the debt capital market.
Who are basically keen about these listings, the industrial manufacturing or the financial services sector?
Every segment of the economy will be keen. Essentially, if you also look at the investors, what FMDQ listing brings also is the very high level of transparency. One of the prizes on the securities, FMDQ recently launched is e-discovery, where every member of FMDQ, investors, corporate treasurers can see prices as the market is trading. This is web-based, which means all over the world, everyone is seeing this. That is the level of transparency. In the past, you have the documents of the debts in hard copies, and it appears they will only be available to a reasonable extent to the primary buyer. But with FMDQ's listings and quotations, all these documents are available to any potential investor at any point in time.
But investors will be interested in the prices and the yields on these instruments, obviously, not just the book, not just the information in the books, is it?
Oh, definitely. That information I talked about, the price formation, was actually the secondary market bid. The over close to 900% of the liquidity in the bond market in this country takes place on the FMDQ platform of the members. Most of the members, some of them are the Nigerian Stock Exchange security dealers, and also mostly the banks, trade on this platform, which is has high level of visibility. In a matter of weeks, all over the world, they'll be able to see the prices of the Nigerian bonds, albeit with 15-minute delay, but from any part of the globe, people can see the debt securities trading in Nigeria. What that does to the issuer is when the issuer is coming back to the market, he has a reasonable level that the market has more or less set its paper, and day in, day out, the issuer itself can track what is going on with his paper.
For the FMDQ OTC platform itself, what impact would this have moving forward?
Great impact. Again, the agenda of FMDQ is being gold. We talk about global competitiveness. What we're driving at every day is to ensure the Nigerian debt capital market is globally competitive. We will be introducing indexes to that market. Operational excellence. We're working with the central bank to ensure that trading is very seamless. So once the traders trade on the FMDQ system, this will go to the central bank for settlement, and those bonds that are settled on the CSCS can also go to CSCS in a seamless fashion. This is the sort of standard that you expect to see in a market that is developed. The L in the gold stands for liquidity. It is of importance to us that the market is very liquid. So the trading intensity, how quickly this value is transferred from a willing buyer to a willing seller, it's important. The last bit of that gold is diversity. In a market where in today's world things are volatile, things are uncertain, things are getting complex, and you're unsure of exactly what is taking place, there's ambiguity and all those things, it is important that we have risk management products in the market. It is important that there's diversity in products. You should have the short end of the yield curve, the commercial papers, those that want to borrow at the short end, and also those that want to borrow at the long end. And you also then have risk management futures for them to hedge themselves. So it's a big milestone for FMDQ for the listing process. It also confirms fully what we've been saying about the Nigerian financial markets has been highly innovative. And the model we brought to this market is something that other countries, other African countries, and probably beyond Africa, will see things to learn on how we've decided to organize our over-the-counter market and to be sure there is also integration of the market. With the erstwhile, in the past, you had this dichotomy of money market, capital market. In FMDQ, you have members of the Nigerian Stock Exchange. It's one market at the end of the day. And the value FMDQ brings to the Nigerian financial market for us is to make sure it's globally competitive.
Congratulations. So you have the first corporate bond listed. How many more listings are you expecting in 2015?
I mean, I can say 20 more or 30 more. What is important is the UBA, United Bank for Africa, has taken the lead to be the first. We actually have two other bonds that are before the board listing and quotations committee for approval. I think one of them is already approved. There are other institutions that will come. If you look at the infrastructural gap in Nigeria and sense that debt is going to play a major role in this country, then it helps to dimension the role FMDQ is going to play in the Nigerian financial market ecosystem. In terms of numbers, in values and quotations, commercial papers and bonds, we expect a high number. Again, a new government is coming in. It's going to take a while for them to settle down, but the states are going to borrow. The federal government itself is going to borrow. We're expecting the federal government of Nigerian bonds also to be listed on FMDQ, and we're working hard with the debt management office on this. It's a great time, so I won't really want to commit to a number, but we will. If you ask my business development officer, we would like to have 50 more. But these things take time and process.
But for FMDQ, the floor is open.
It is open.
Thank you very much.
Thank you very much.
For speaking with us.
Thank you very much, President. Thank you.